You walk through the house one more time before signing. The light comes through the windows differently than it did during the first showing. It already feels like yours. There's a quiet excitement in your chest, something close to pride. You imagine where furniture will go, what the mornings will feel like, how you'll tell people you own this. Not rent. Own. The word carries weight. It feels like crossing a threshold into real adulthood, into stability, into something permanent in a world that often feels temporary. When you sign the paperwork, you're not just buying a house. You're buying proof that you've made it. The first few months feel different. You notice details you never cared about before. The way the door closes, the sound of your own footsteps, the fact that no landlord can tell you what to do. There's a particular kind of satisfaction that comes with ownership. You've entered a club. Friends congratulate you. Family members nod approvingly. It's one of those life moments that everyone recognizes as success. And in many ways, it is. But then something subtle begins to happen. The mortgage payment that felt manageable in theory starts to reshape the way you think about everything else. Not dramatically. Not all at once. It's more like a quiet background hum that influences decisions you didn't realize were connected. The payment is due on the first of every month. It doesn't negotiate. It doesn't pause. It doesn't care if you're tired, uninspired, or wondering if there's a better way to live. It just waits. Recurring, predictable, non-negotiable. At first, you barely notice. You have a job. You have income. The system works. But over time, the mortgage stops feeling like a milestone you achieved and starts feeling like a structure you must constantly maintain. The house still feels like security, but the mortgage itself quietly increases your dependency on continuous, uninterrupted income. And here lies the contradiction most people sense but rarely articulate. The thing that symbolizes stability also creates a form of long-term financial obligation that reduces your ability to change direction. The mortgage brings with it a fixed monthly cost that must be met regardless of what else is happening in your life. This isn't inherently bad, but it does mean that every major decision you make from that point forward has to be filtered through one question. Can I still afford the house? Want to take a few months off to reset? The mortgage doesn't pause. Considering a career change that might mean lower income for a while, the payment stays the same. Feeling burned out and thinking about stepping back? The obligation remains. What looked like security starts to function more like a tether. This pressure is structural, not personal. It's built into the design of the mortgage itself. When you commit to a 30-year loan, you're not just committing to paying for a house. You're committing to maintaining a specific level of income across decades of life changes, economic shifts, personal growth, and all the unpredictable things that make us human. The mortgage assumes your future self will have the same earning power, the same priorities, the same willingness to keep showing up for work, even when everything in you wants to stop. For many people, this creates a background anxiety that becomes so normalized they stop noticing it. The fear of income disruption becomes a constant companion. Losing a job goes from being stressful to potentially catastrophic. The ability to take risks, whether professional, creative, or personal, shrinks. You begin to optimize for safety rather than growth. Relocating for a better opportunity becomes complicated. Redesigning your life around something other than maximum earning potential starts to feel irresponsible. The mortgage doesn't just sit in the background of your finances. It begins to sit in the background of your psychology. This wasn't always the case. Long-term mortgage structures, particularly the 30-year fixed-rate mortgage, became widespread in the mid-20th century, during an era of unprecedented economic growth and employment stability. The system was designed around the assumption that someone would work for the same company, or at least within the same career, for most of their adult life. Income was expected to be consistent, predictable, even increasing. In that context, a mortgage made perfect sense. It allowed people to build equity while living in a home they could otherwise never afford upfront. It was a tool for expanding the middle class. But the economic conditions that made mortgages a reliable path to wealth have shifted. Job stability is less guaranteed. Careers are less linear. The idea of working for one employer for decades feels almost quaint. Yet the mortgage structure hasn't changed. It still operates on the assumption of long-term, stable income. The gap between what the mortgage requires and what modern working life actually offers has widened, but the cultural narrative around homeownership hasn't caught up. We still talk about mortgages as symbols of success, rarely pausing to examine what they demand in return. The financial system has every reason to keep it this way. Mortgages are extraordinarily profitable for banks. They create long-term, predictable revenue streams backed by a tangible asset. The housing market has become a cornerstone of modern economies, tied to everything from construction jobs to consumer spending to political policy. Home ownership is not just normalized, it's actively encouraged through tax incentives, social messaging, and cultural mythology. Renting is often framed as throwing money away, as though paying interest to a bank for decades is fundamentally different. The truth is more complicated. Renting offers flexibility. Owning offers equity. Both come with costs. Neither is inherently superior. But only one gets celebrated as a rite of passage. The psychology of home ownership runs deep. Once you own a house, your identity begins to attach to it. It becomes part of how you see yourself, part of the story you tell about your life. There's an emotional weight that makes it harder to think clearly about the trade-offs. You start to justify the pressure, because walking away would feel like failure. Selling would feel like giving up. The house becomes more than a financial asset. It becomes a symbol of your choices, your worthiness, your place in the world. And that makes it very difficult to ask the uncomfortable question, is this actually making my life better, or just more rigid? There are patterns that make this worse. The first is buying more house than your income can comfortably support. It's easy to do. Lenders will often approve you for more than you should borrow. The excitement of home ownership can cloud judgment. You tell yourself you'll grow into it, that your income will increase, that you'll adjust. But when you stretch to the edge of affordability, you leave no room for error. Every month becomes tight. Every unexpected expense becomes a crisis. The house stops being a source of pride and starts being a source of stress. The second mistake is treating the mortgage as guaranteed security. People assume that because they own a home, they're financially stable. But a house is only an asset if you can sell it. And selling requires the right market conditions, the right timing, and the willingness to uproot your life. Until then, it's an illiquid asset that costs money to maintain. Property taxes, insurance, repairs, these don't stop. The house might appreciate in value, or it might not. Either way, it doesn't put money in your pocket while you're living in it. Confusing ownership with liquidity is a subtle but significant error. The third mistake is building your entire lifestyle and identity around the property. When your social life, your routines, your sense of self all revolve around the house, you lose the ability to imagine alternatives. The house becomes the center of gravity, and everything else orbits around the need to keep it. You stop asking what kind of life you actually want and start asking what the house allows. That shift is quiet, but it's profound. There are smarter ways to think about this. The first is to prioritize flexibility alongside ownership. If you buy a house, make sure it doesn't consume so much of your income that you lose the ability to make other choices. Build savings. Maintain emergency funds. Keep your career options open. Don't let the mortgage become the single organizing principle of your financial life. The second shift is to value financial resilience over the appearance of stability. A smaller, more affordable home that leaves you with breathing room is often a better choice than a larger, impressive one that keeps you stretched thin. Resilience means having options. It means being able to handle disruption without catastrophe. It means not having to stay in a job you hate because leaving would threaten the roof over your head. The third is to structure housing decisions around optionality, not social pressure. Don't buy a house because it's what you're supposed to do at a certain age or income level. Buy it because it genuinely serves your life, your goals, your actual needs. If renting gives you the freedom to pursue work you care about, to move when opportunity arises, to live without the background hum of obligation, that might be the smarter choice, even if it doesn't come with the same social validation. None of this means mortgages are inherently bad. For some people, in the right circumstances, home ownership is a powerful tool. If you have stable income, strong savings, a clear sense of where you want to be long term, and a mortgage that doesn't stretch your budget, buying a home can genuinely create stability and build wealth over time. The key is that it has to be the right size, at the right time, for the right reasons. When those conditions align, a mortgage can be a foundation rather than a trap. But those conditions don't apply to everyone, and the cultural narrative around home ownership doesn't make room for nuance. It treats mortgages as universally good, as the default path to financial success, without acknowledging the trade-offs or the ways they can quietly limit freedom. What we rarely talk about is how a mortgage doesn't just determine where you live. It shapes how you work, what risks you can take, how you respond to opportunities, and what kind of life you're financially able to design for yourself over the course of decades. A mortgage is not only a way to buy a house, it's a long-term life structure. It can either support the freedom to build the life you want, or it can create a subtle, persistent dependency that keeps you locked into patterns you might not have chosen if the stakes were lower. The difference comes down to how it's used, how much it demands, and whether you're able to see it clearly for what it is, not a symbol of success, but a tool with costs and benefits that deserve to be weighed honestly. The house might give you a place to live, but the mortgage shapes the life you're able to live inside it. And that's a trade-off worth understanding before you sign.